Welcome back to another episode of Money with Ben, where you learn to manage your money with confidence. My name's Ben, and today we are going to be talking about trends and how trends are your friends. And we're going to do something a little bit different today. In the previous episodes that we have done, I have mainly talked about the financial reports, the balance sheet, the income statement, the statement of cash flows. But today, rather than just talking about it, and especially when it comes to this topic about trends, I'm actually going to show you an actual balance sheet, an actual income statement, and actual statement of cash flows. And the company that I'm going to be using is Nvidia. I think it would be a pretty good example of what we are looking at when it comes to trends. I am not saying that Nvidia is a company that you should invest in. This is not investment advice. I just like to use them as an example. And if you have any other companies that you want me to use as examples, let me know, and I'll be sure to include them in the next video. So what are trends exactly? In order to understand trends, it's also important that we recap what was going on with the three financial statements. Since the whole point of starting a business is to make cash, is to make more money, you want to be able to see if your business is doing better over time. There's no point in running a business if it's just going to keep getting worse over every single year or every single month or every single quarter, whatever time period you have. And that's why we use trend analysis. Trend analysis is simply looking at how you did in one current period and then figuring out how does that compare to past periods. This can be over days, this can be over weeks, over months, over 3 months, also known as quarters, or over years. As long as the different points in time are equal and that you're comparing them. You don't want to compare what happened last month to what happened the previous 12 months, all right? You want to look at what happened in 1 month compared to what happened in the previous month. So let's take a look at Nvidia. I have them printed out over here on my side, but they're also going to be showing up on the screen. So if you see me looking down, that's the reason. So let's think about how we're running a business. Probably start with cash. You probably took some cash that you own yourself or some money that you borrowed from the bank. So now you have some assets. The goal, remember we said that the goal is to make more money. What we're trying to do is use the cash to purchase assets or to get more things that we have, so that way those things help generate revenue. Like for example, if you're trying to sell toothpaste, let's for example, Colgate or Crest, you're going to purchase equipment, you're going to purchase machinery, you're going to purchase buildings, those are assets, so that way you can produce more of these products, these toothpaste products, and then you can sell them. So the point of those assets is to help generate revenue. Now, of course, there's costs involved. So hopefully what happens next, after the assets help you create revenue, that revenue should turn into net income after all of your expenses have been taken care of. And after that, you want your net income to then convert into cash again. So that way those cash can help get more assets, which help generate more revenue, which helps generate more net income, which helps generate more cash, and so on and so on and so on. It is extremely vital that you understand this cycle that's going on. And so we are going to look at Nvidia's assets trends, revenue trends, net income trends, and operating cash flow trends. The way I was able to get this information, and this is information that anyone has access to. All you have to do is just type in the company that you're looking for, such as Nvidia, and then type in 10K. And it'll take you to a certain website within that company that will show you all the filings and all the annual reports that they have to give to the SEC, otherwise known as the Securities and Exchange Commission. And the big report that we get annually that shows all these financial statements plus a whole bunch of language and a whole bunch of words is called the 10K. And in this 10K, it shows the balance sheet, the income statement, and the statement of cash flows, plus some extra reports, but we're not going to go too much into that. Those are more specific. But these are the fundamentals that you want to know. Balance sheet, income statement, statement of cash flows. So let's take a look here. If we look at the balance sheet for Nvidia, let's go to the end of January 28, 2024. Look at the total assets they have. You might think, oh, they only have $65,000. No, just remember, this is in millions. So when that says 65,000, it really means that they have $65 billion in assets. And so if we just had 2024's numbers, we can say, okay, they have $65 billion in assets. Is that a good thing or a bad thing? Because remember, sometimes it's good to have more assets, to have more things that you have, but that might not always be a good thing depending on where it came from. And if you don't know the previous numbers, you don't know if that number is growing or if it's shrinking. It would be great if you had $65 billion, but what if you had $1 trillion the previous year? For some reason, you lost a whole bunch of those assets, and now we have to try to figure out why, so that way we're not concerned that something terrible is happening to your business. So we have 65 billion. From now on, I'll just keep saying the thousands. So we have 65,000, and look at the previous year. We have 41,000, previous year 44, previous year 28, previous year 17, previous year 19. So if you go from 19 to 24, you'll notice that the assets are having some type of pattern that they are slowly, but eventually they're going up. And that's a good thing. We're trying to see that the assets are going up, because the hope is that when the assets are going up, that means that they're also using those assets to generate more revenue. We are seeing an uptrend here, and that is very much a good thing. I'm not going to say it's always a good thing, but that's typically a good sign whenever we're analyzing a company. If you're ever analyzing your company, you want to take a look and see, are my assets going up every single year, or are they going down every single year? We see that Nvidia is going up, and that's good. Now let's take a look at their income statement. Is the revenue going up? Let's see. January 2019, revenue went to 11,000. Then it went down 10,000, but it went up 16,000, all right? Then up 26, up 26 again, and then up 60. So we're seeing that revenue is also going up. So that is very much a good sign. You always want to see revenue going up. No matter what the case is good, because it's showing that you're making more money in the present and for the future. So the fact that it's going up, as you can see these numbers as they're increasing over each period of time, that is definitely a good sign. Now we're going to look at the income. Don't worry so much about all this details that are going on. I extracted this raw from the financial statements. And then we have the net income, the very bottom line. 4,000, 2,000, 4,000 again, 9,000, 4,000, then 29,000. Okay, so it went down some years, and then it was going up, and then down again, and then it was going up again. So that might be something weird going on, because the hope is that if your revenue is going up and your expenses are staying relatively constant, we should see the net income going up around the same pace. But if you see this fluctuation, especially if the revenue is going up, that means that something's going on with the expenses, and then that would prompt a business owner or prompt an accountant to look further into this. Okay, why do we have this fluctuation? The net income going down, going up, going up, going down, going up again. And then we have the operating cash flow. In the operating cash flow, or as it says here in the cash flow statement, net cash provided by operating activities. We just call it operating cash flow. Starting from 2019, 3,000, then 4,000, then 5,000, then 9,000, then down 5,000, but then up 28,000. So it was going up. It had some type of shortfall at the end of January 2023, but then it shot back up again. So these could mean a myriad of things. But the good news is, overall, the assets, the revenue, the income, and the operating cash flows, they are going up. So it shows that this is a pretty healthy company. If you saw these numbers having a trend of going down, then you'll notice that something's going on. It might be in danger. There might be a hole that's going on in the business that needs to be fixed. I understand that when you look at these numbers, it can be very difficult to see that line. That's why in many cases, what people do, they just create a line chart. They just take these numbers and put them on a line graph and compare these numbers visually to each other. And here's another thing that we can do. This is a really helpful formula for determining how well your trends are doing, is this formula that shows the percentage changes. It's good to know that the numbers are going up a certain amount, but what's also helpful is knowing how much are they going as a percentage. And one of the benefits of knowing the trends as a percentage is that you can use those percentages not only to compare your growth with previous years, but also to compare your growth with other companies that are in your industry. So let's say, for example, there was another company similar to Nvidia, and you saw those companies' numbers going up in their assets, revenue, income, and their operating cash flow. But you want to see, okay, that might be great, but how are they doing relative to each other? Using the percentages is a great way to determine that. Right now, we're just going to stick with how well are they doing with each other over periods of time. This is how you analyze the percentage change from one period to another. You take the new number divided by the old number minus 1 times 100. So let's use the revenue, for example. You have 60,922. That's the new number. You divide that by 26,974. That's the old number. You're going to get 2.26 ... Subtract 2.26 ... by 1, you're going to get 1.26 ... And then multiply that by 100, and you're going to get roughly 126%. So from the end of January of 2023 to the end of January 2024, the revenue for Nvidia increased by 126%. That basically means that revenue nearly doubled. That is a very impressive rate of growth. But if you compare that between the rest of the years, so between 2019 and 2020, revenue went down 7%, then it went back up next year by 53%. Then up again by 61%. Then it didn't really change much, so it really was just 0%, so it just stayed the same, and then it went up 126%. So we can see that it's growing pretty well, especially in 2021 and 2022, but then something happened at the end of 2023, January, but then at the end of January 2024, it went back up tremendously. So those are some things that you can use to analyze. If you follow the same formula and you look at the trend analysis for assets, trend analysis for revenue, trend analysis for net income, trend analysis for operating cash flows, and you compare those to one another, you can see which ones are doing the best in their growth. And the hope is that assets are growing the slowest or growing the smallest, and that operating cash flow is growing the most. The reason we say that is because at the very end of the day, we care more that the business is making more cash than it is spending on assets making cash. So we want to see assets growing, but we want revenue growing more than assets. And we want net income growing more than revenue. And we want operating cash flow to be growing more than net income. Why? Buying assets is fine, but it doesn't matter if we're buying assets if our revenue isn't growing. That's why we want to see it get bigger. Getting revenue is fine, but we also want to see the net income get bigger. If we're seeing revenue grow up, but revenue not growing up as fast, that means that we're just spending more money and we're just getting more expenses than what's really giving us a profit for. And the net income, we want to see that grow, but we also want to see the cash flow that comes in from that net income to be growing faster. Because while it's nice to have net income, we also want to see cash. So when you compare that, if you were to look this for Nvidia, it seems that it's doing relatively well in regards to making things grow. There are some cases in where you can see that assets are growing sometimes better than revenue and net income, and it fluctuates, and that's okay in many cases. But what we're trying to see primarily is the growth, because that's the whole point of the company. We want to see the growth occurring, especially in these 4 areas. If you have any questions in regards to this company in particular, or how to better utilize this formula for yourself, just let me know in the comments and I'll be happy to answer them. But that is the essence of what I wanted to teach in regards to these financial statements and these trend analyses. The big takeaway is you want to see your company grow, and you want to see it grow every single period of time. You want to see it increase. And the four main elements you want to see it increase are assets, revenue, net income, and operating cash flow. And more importantly than that, you want to see assets grow, but you want to see revenue grow greater than assets, net income to grow greater than revenue, and operating cash to grow greater than net income. That is going to be a very healthy sign that a company are using their assets well to generate that revenue. That revenue is being efficiently converted into net income, and that costs are kept to an absolute minimum and are not growing faster than your revenue. And that net income, which you gotta remember is cash that's supposed to come in now and in the future, is turning to operating cash flow, which is cash that we receive right now. I have some warnings in regards to this formula of the trend analysis. It works great when all the numbers are positive, but there might be some cases in where you might see the numbers being negative, especially in the net income and the operating cash flow. And when you see a negative number, using the trend analysis as a percentage ends up being a lot more complicated. In that case, it's better to use the line charts or the graphs in order to determine how well your company is growing. And I'm going to try to provide a visual of all these four elements together in a line graph, so that way you have that visualization that you're looking for. So I hope this was helpful in seeing that the relationship between the three financial statements and understanding how the business operates and what you should be looking for. And we might go into in other videos, if we see something not working as the way that we just talked about in this video, are there any ways to improve it? But until then, we're going to keep talking about the different ways to determine how healthy or how unhealthy your company is working. But until then, this has been Money with Ben, and I will see you next time.